We are starting with the class. Yes, we are live. We are going live. Yes, we are live now. Okay. Hello, friends. Good evening. So, as a part of our lecture series on accounting, I'll just adjust the camera a bit. Yes. Now, as a part of our lecture series on principles and practice of accounting, CA Foundation, accounting, friends. So, we are already done till journal entries. We have even finished off with the textbook questions of ledger of journal entries, and today we are going to start with ledgers. So, today the program is going to be on. We will see the basics of ledger, friends, and later tomorrow we will do some textbook questions on ledgers. Okay, friends. So, as a practice, as an accounting process, in the very beginning also we have discussed as a practice what we do in our books. First we start with our journal entries and move on to ledgers. Normally this is what we do, right? After ledgers, once from ledgers we prepare our trial balance, and from trial balance we go to our final accounts. Of course, this is the total process that usually we follow, friends. Correct, ma'am? Everybody knows this very well. Just a moment, friends. I have to, this is already zoomed too much. Actually, I have to reduce the zoom. Okay, yeah. I have to reduce the zoom so that you'll have a better view. Okay, I hope now you got a better view now. Okay, so now this is the case, my dear friends. You will have journal entries, next ledgers, next trial balance, and then from there we will go into final accounts. So you know this very well. So ledgers is the most important aspect which acts as a bridge between journal entries and trial balance, and the two ledgers is a part of our bookkeeping. If you remember, it's a part of bookkeeping. What is the meaning of bookkeeping, friends? We actually do it almost on a daily basis. We do this. Everybody knows this very well, right? We do it on a daily basis. So what is the ledger, sir, and how is it prepared? Very simple. Now once we finish off writing journal entries for a particular day, immediately we'll start with ledgers. A ledger is a separate book, my dear friends. In book, what will happen is, depending on the amount of transactions we have, we actually provide pages exclusively for particular accounts. Say for example, you say cash account. So cash account in our business will be so many number, correct, man? Lots and lots of transactions will be there in our books usually. So what I will do, I will actually make a separate book for cash book, or I will allot more number of pages to make cash account ledger separately. For example, I have building account, ma. So in building account, what will happen? In just a moment, I'll change the pen for you. Okay, so I have buildings account, my dear friends. Now in buildings account, normally what will happen, friends? The number of transactions will be very less. The number of transactions will be very less. So for that purpose, what I will do, I will actually make very less number of pages, probably 1 page or 2 pages for that, and then I will continue. Understanding, friends? Similarly, you have salaries. How many times in a year you pay salaries, ma? Only 12 times in a year, correct, ma? Monthly once in a year, 12 times you pay salaries. So for salaries, what I'll do, I'll keep 1 or 2 pages exclusively just to fill that 12 transactions. I'll keep only 1 full page or 2 pages maximum a lot. So depending on the number of transactions that you actually expect in that particular account, accordingly I'll allot the number of pages, and each account for each account I will prepare a ledger this way. Okay, a ledger will usually be in a T format. Okay, for example, I take something as cash account. For example, I am preparing something, what, ma? Cash account I am preparing. Okay, na, ma? Cash account, it will be in T format. Normally, what all columns usually will find is, first you will find date column, and this side also you will find date column. Acha, 2 times date column, sir. Yes, 2 times date column. Next, I will find particulars column, and here also particulars column. Oh, particulars also you are writing 2 times, sir. Yes, we are writing 2 times. Next, what you will find? I'll find journal folio number. What is that, sir? Journal folio. Wait. Both the sides I'll write journal folio number. And finally, I'll write amount on both the sides. Amount on both the sides. Both the sides I'll write amount also. Both the sides I'll write amount also. Sir, You are preparing date, particulars, journal folio and amount on this side also, and date, particulars, journal folio and amount this side also. Both the sides you are preparing, sir. Yes, we prepare on both the sides, my dear friends. That's sir, why two sides, sir? Because whatever be the left hand side of the ledger we have, we call it as debit side. Whatever be the right hand side we have, we call it as credit side. Debit side and credit side. We have two sides, debit side and credit side. Both will have four columns each. Debit, date, particulars, journal folio, amount. Similarly, date, particulars, journal folio, amount. Okay, we'll have it on both the sides. Debit side also, credit side also. Both the sides you will have this existing. Got it, friends? Now, this is how typically a ledger looks like, ma. The format of ledger looks like. Okay, na, ma. But I'm more and more interested to learn about how we actually post entries into ledgers. Post entries into ledgers. How do we do it, sir? I would like to first show you how do we post it. Okay, na, ma. Let me take an example of salaries paid. Okay, all of you please carefully observe how do I do it. Now, I say salaries paid. I paid salaries. Salaries paid. Okay, what is the actual journal entry, my dear friends? Salaries account debit to cash. For example, you paid in cash, for example. Salaries account debit to cash. This is my journal entry. Correct, amma? Now, what I will do? I will have a separate ledger for salaries account. I'll have a separate ledger for salaries account. As well as I'll have a separate ledger for cash account also. I'll have separate ledger for cash account also. I'll have ledger for both salaries also, cash also. Both I will have. Now, salaries is getting debited. Salaries is getting debited. So what I have to do is I have to write that amount on the debit side. I have to write that amount on the debit side. In the particulars, what I will do is paying for what? Towards cash. In the form of cash you are paying. I write that as my particulars in the particulars to cash account. In salaries to cash account I write. Similarly, in cash account is getting what? Credited. So I have to get that amount on the credit side of my cash. Credit side of that cash. Credit side of the cash. This is debit side. This is credit side. Similar, this is debit side. This is credit side. Correct, amma? So cash account is credited. So I have to get that amount on the credit side. So I have to write on the credit side. And moreover, towards what? You are paying cash towards salaries. I write salaries account. Salaries account. But as a practice, whatever be the item that we write on the credit side, I start with buy. I start with what, ma? Buy. I start with buy. So in cash account, I write it as buy salaries. Got it, friends? If you observe, salaries account is getting debited. I am writing on the debit side. Cash account is getting credited on the credit side. Obviously, salaries account has to be debited. Cash account has to be credited. Cash account has to be credited. That's why on the salaries account on the debit side, cash account on the credit side. Okay, so this is how I usually post items into ledgers, sir. That is also fine, not an issue, sir. But most important aspect that I want to discuss today is how do you take opening balances, closing balances and all those stuff. That is my most important area, friends. And of course, we will solve one small example question also so that you will understand it very well. How do we actually consider my opening and closing balances? Observe very carefully. What all accounts we have, my dear friends? We have assets, we have liabilities, we have expenses, we have incomes. Correct, ma? 4 types of accounts we have. Assets and liabilities both will have opening balance also, closing balance also. Assets and liabilities may have both opening balance also may be there, closing balance also may be there. For expense and incomes, opening balance will not be there, closing balance could be there. Closing balance could be there. Understanding, friends? Closing balance could be there. Now, opening balance of assets and opening balance of liabilities, both these balances I will carry forward. Both will be brought forward. Opening balances both will be brought forward. closing balances of both assets and liabilities, both will be, the balances will be carried forward. Both the balance will be carried forward. What does it mean? Assets and liabilities both will have opening balance. I will bring that opening balance from last year to the current year, and assets and liabilities both will have closing balance. Both the closing balance I'll bring it from the, I'll carry forward to the next year. Closing balance I'll carry forward to the next year, friends. Okay, Nama. Both I will do the same. I'll do the same. Okay, Nama. Right. Similarly, expense and incomes. For expense and incomes are concerned, you will not have opening balance, but you may have closing balance. But this closing balance will not be carried forward, friends. Either I will transfer it to trading account, or I will transfer it to profit and loss account. Either I will transfer it to trading account, or I will transfer it to profit and loss account. Okay, Namma. Now, trading account, which kind of expense I will transfer to trading account, sir? I will transfer those direct incomes and direct expenses to trading account, and all the indirect incomes and indirect expenses I will transfer to P&L account. All direct expense and direct incomes I'll transfer to trading account, and all indirect incomes and indirect expense I'll transfer to P&L account. What is direct, what is indirect, sir? That I'll explain you. Wait a bit. Okay. As of now, what did we learn, my dear friends? For assets and liabilities, opening balance will be there. Closing balance will also be there. Opening balance we will brought down, will bring it down, brought forward, and closing balance we will carry forward to the next year. Whereas expense and incomes are concerned, opening balance will not be there for both expense and incomes. Only closing balance may be there. That closing balance also will not carry forward. What I will do, I will transfer either to trading account or I will transfer it to P&L account. Which items I will transfer to trading accounts are direct incomes and direct expense. I will transfer to trading account. What kind of items I will transfer to P&L account, ma? I will transfer indirect incomes and indirect expenses to profit and loss account. Okay, Namma. What is direct and what is indirect? That I will explain you. Wait for a moment. Okay, Nama. But as we have discussed, both assets and expenses comes under which category, ma? Debit category, you know very well, and liabilities and incomes comes under credit category. That also you know very well. Already we have discussed liabilities and incomes comes under credit category. Remember this point very, very carefully, my dear friends. This what will be the next points I'm going to discuss with you. Okay, Nama. Always remember, opening balance will be on the same side. Opening balance will be on the same side. Closing balance will be on the opposite side. So you have to remember this rule. What is the rule, my dear friends? Opening balance will be on the same side. Closing balance will be on the opposite side. Opening balance on the same side, closing balance on the opposite side. Got the point, ma? That is how you have to remember carefully. Okay. What is the meaning of this, sir? Very simple. For example, I will take an example of an asset. Asset will have which balance, ma? Debit balance. Because assets come under which category, ma? Debit category, debit balance. Debit balance means what? As far as opening assets are concerned, their opening balance will be on the debit side. Opening balance will be on the debit side for assets are concerned. As far as assets are concerned, friends, opening balance will be on the debit side, but closing balance will be on the opposite side. We have discussed assets come under debit balance, so closing balance will be on the credit side. Sir, how does this work, sir? Wait for a moment, I'll explain you. So when it comes to assets, debit balance will be on the opening balance will be on the debit side, closing balance will be on the credit side. Opening balance same side, closing balance opposite side. Okay, Namma. Now let us understand how it works for liabilities, my dear friends. When it comes to liabilities, what will happen, ma? Liabilities comes under which category? Credit balance. Correct, ma? Here only we discussed liabilities comes under credit category. Credit category means liabilities comes under credit balance. Credit balance means what, my dear friends? Come on. Opening balance will be on the same side. Same side means credit side. For liabilities comes under credit balance, namma. Opening balance same side, credit side. Closing balance will be on the opposite side. Opposite side means debit side. Opposite side means what, ma? Debit side. This is the rule for liabilities, ma. Liabilities will have credit balance. Credit balance means opening balance will be on the credit side. Closing balance will be on the debit side. Okay, na? Similarly, you have third point to be discussed. What is my third point, my dear friends? When it comes to expenses, when it comes to expenses, what will happen? This will come under debit category. Correct, ma? Debit balance. It means opening balance will be on the No side. For expense, there is no opening balance, sir. For expense, there is no opening balance. For expense, there is no opening balance. Understand? Because no opening balance. Just now we discussed, right? Expense and incomes will not have opening balance because we don't carry forward anything. Okay, nama. Opening balance, nothing. But closing balance, ma, will be on the opposite side. It means credit side. Opening closing balance will be on the credit side. Amma, closing balance on the credit side. Okay, nama, that will be transferred to P&L account or anything, that is fine, that is okay. But which side it will come? Expense comes on the credit side, closing balance. Similarly, when we talk about fourth, incomes, amma, incomes comes under which category, friends? Comes under credits, credit balance, credit side, credit category. What does it mean? Their opening balance will be nothing. Oh, incomes will not have opening balance. Just now we discussed, nama, incomes and expense will not have any opening balance, but closing balance will be on the opposite side. What is the opposite side for incomes, my dear friends? Debit side. Closing balance will be on the debit side. Okay, nama. So these are the rules that we have to understand in relation to ledgers, my dear friends. What did I say? Opening balance will be on the same side. Closing balance will be on the opposite side. As far as assets are concerned, debit balance means opening balance will be on the debit side. Closing balance will be on the credit side. As far as liabilities are concerned, liabilities are coming under credit category. Credit category means what? Opening balance will be on the credit side. Closing balance will be on the debit side. Similarly, expense comes under debit category. What does it mean? Opening balance will not be there for expenses, but closing balance will be on the credit side. Similarly, incomes will be are of credit category. What does it mean? Opening balance will not be there, closing balance will be on the debit side, opposite side. Okay, nama, closing balance on the debit side. Okay, you have to remember this point very carefully. Opening balance same side, closing balance opposite side. Okay, nama. Assets and expense comes under debit category, liabilities and comes under credit category. Okay, nama. So these rules you have to remember very, very carefully. If you remember this, how does these ledgers usually look like with the opening and closing balances? Let me just show you for an asset and for a liability. Okay, now friends. So for example, I will take an asset, ma. Okay, for example, any particular asset. Any particular asset. Okay, asset will have comes under which category, ma? Debit category. Debit category means what? Opening balance on the debit side. So I will write to balance brought down or brought forward. You can write it as any way. Opening balance will be on the same side and closing balance will be on the opposite side. Amma, closing balance on the opposite side means what? By balance carried down or carried forward. You can write it anyway. So that is my opening balance I have taken, and I have taken all my closing balance also. Okay, and if by any reason, if the asset increases, amma, already we have learned that rules also very well. Okay, I strongly believe that you remember. If assets and expense comes on debit category, what does it mean? If they increase debit, if they decrease credit. We have learned that, right? Similarly, incomes and liabilities and incomes comes under credit category. What does it mean? If they increase credit, if they decrease debit. This is what we have been doing, correct, ma'am? Same rule even we will apply here also. Okay, nama. See, observe, if for any reason, if asset is increasing, what I will do? Asset increases, I have to debit. So I will write on the debit side. Whatever be the reason, if the asset increases, whatever be the reason, if the asset increases, I write on the debit side. Apart from opening balance. Apart from opening balance, whatever be the reason, if at all the asset increases, I will write it on the debit side. Whatever be the reason, if the asset decreases, I will write on the credit side. By whatever be the reason, decreases. Whenever asset decreases, I will write it on the credit side. Same journal entries rule only we are applying. Asset increases debit, asset decreases credit. Asset decreases credit. This is debit side, this is credit side, nama. Okay, ma. Asset increases debit, asset decreases credit. Simple. Okay, nama. Overview of a ledger. How a ledger looks like. Overview I'm just talking about. Okay, nama. Similarly, if at all we go through a liability, how does it look like? Chalo, we'll make a liabilities account also. Liabilities. If at all I go through a liabilities account, my dear friends. In my liabilities account, what will happen in my liabilities account? Liabilities comes under which category? Credit category, sir. Credit category means what? Opening balance will be on the credit side. Correct, amma? By balance brought down. Opening balance of the ledger will be on the credit side and closing balance will be on the opposite side. So to balance carried down. To balance carried down. This is my closing balance. This is my opening balance. and this is my closing balance. This is my closing balance. This is my closing balance. Got it, friends? Now, what are be the reason if a liability increases? Liabilities comes under credit category. What does it mean? If they increase, I have to credit it. Whatever be the reason, if a liability increases, that item will come on to the credit side. Whatever be the reason, if the liability increases, it comes on to the credit side. Okay, whatever be the reason, if the liability decreases, friends, that item comes on to my debit side, because liability comes under credit category. Increases credit, decreases debit. Correct, amma? So decreases will be on the credit side. So you have to remember these rules. So you have to practice a bit. Okay, if you practice a bit, friends, it will be very easy for you while solving the questions and all. You will feel very, very comfortable while solving the questions. Okay, amma? So liabilities increases credit side, decreases debit side. Okay, Nama, very nice. I understood this also, sir. Now, how does a simple expense and income accounts looks like? That also we will discuss now. Just a moment, guys. I'll put them in an order so that I'm actually accumulating all the papers for you. So if somebody asks, I thought of sharing them. Okay. Now, observe this very carefully. When it comes to expenses, when it comes to expense account, I want to show you expense incomes in two ways, friends. One is in a simple format, simple expense, how does it look like? Then I'll show you how accrual basis, how do they look like? Both I want to show you. Okay, Nama? Now, simple expense. Expense comes under debit category. Opening balance will not be there. Expense will not have opening balance. Correct, Nama? Closing balance will be on the opposite side. Opposite side means by either you will transfer it to trading account, or you will transfer it to profit and loss account. Depending on the nature of the account, depending on whether it is direct or indirect, we are going to actually transfer them. Sir, what is direct and what is indirect? Sir, today's class itself, we are going to discuss about that point, friends. Don't worry about that. Okay, Nama? So you will have the trading account, debit side, closing balance will be on the credit side, and it will be transferred to trading account or P&L account. Okay, simple. Even expense comes under debit category. Debit category means what? If they increase, we have to debit it. Increase, we have to debit it. And if they decrease, friends, I will credit it. Decrease, I will credit it. If they decrease, I will credit it. As simple as this. If they increase, debit. If they decrease, credit. Okay, Nama? So that is what we will be doing for a simple expense account. And when it comes to simple income account, sir, that also we will see. A simple income account we will see. Income account, then that to a simple income account I will see without accrual system. Okay. Oh, credit category. Income comes under which category, ma? Credit category. Okay. Credit category means opening balance will be on the credit side, closing balance will be on the debit side. Correct, ma? In for an income there will be no opening balance, only only closing balance will be there. Closing balance means it comes on the opposite side. Opposite side means which side, ma? Debit side. Debit side I will say to either trading account or to profit and loss account. Depending on the nature of the account, I will usually transfer. Which accounts will go to trading account? Ma? Direct incomes. Which items will go to P&L account? Indirect. Meaning, I'll explain you just a moment, please. So, if this is the case, now when incomes increase, what I will do? Incomes comes under credit category. If they increase, I will credit it. Increase, I will credit it. And if at all incomes decrease, friends, I will write it on the credit side. I will give you examples, just wait for a moment. Okay, Nama? If incomes increase, credit side. If they decrease, debit side I will write. Okay, Nama? That is how a simple income accounts looks like. Okay, sir. Simple incomes account also I understood. Now, what is accrual system? Under accrual system, how do I do it, sir? Very simple, ma. If you remember, we have already discussed accrual system. We have already discussed accrual system, right? As per accrual system, how do I take it? In just a moment. Okay, no comments, nothing as of now. Okay, no comments, nothing as of now. Okay, chalo, have a look at this. Now, when it comes to accrual system, how do we prepare ledgers for expense and incomes? Very simple. Amma, when it comes to expenses both may have outstanding expense may also be there, as well as prepaid expense may also be there. All of you remember this? Under expense we have discussed this, right, ma? If at all you incur but do not pay, it become our outstanding expense. If you pay but not incurred, it becomes our prepaid expense. All of us remember this, right? Remember this very well. Okay, now outstanding expense comes under which category, ma? It's a part of liabilities. It's a part of liabilities. Prepaid expense is a part of an asset. Already I discussed this point also with you in my previous classes. Friends, by the way, if you would have forgotten, if you would have not seen my previous videos, I will give the description, I will give the playlist of the entire journal entries in the playlist below, friends. I will give it. I have not placed it yet. I will place it after the class. You please go through that particular link. Ensure that you are watching these videos from beginning till now. Okay, friends, till date we have covered 6 classes on journal entries. Complete master class of journal entries, in-depth journal entries we have covered along with your textbook questions. Okay, friends, ICA textbook questions. Please go through them and please solve them quickly. Okay, ma'am. Right. Now, outstanding expense comes a part of liabilities. Prepaid expense comes under part of assets. It means liabilities will be having which category, ma? Credit category. Asset will be having debit category. If liability has got opening balance will be on the credit side. Closing balance will be on the debit side. Correct, amma? Closing balance will be on the debit side. Similarly, for an asset, what happens? Opening balance will be on the debit side. Closing balance will be on the credit side. It means when you talk about expenses under accrual system, you may have both outstanding expense, it means payable also may be there, prepaid expenses, prepaid, you have already paid it earlier. So both expense and liability, asset and liabilities both may be formed. For that case, how many balance you have? You see, 2 opening balances and 2 closing balances you have. 2 opening balance and 2 closing balance you will have. Understanding, friends? 2 opening balances and 2 closing balances you may have. And how do I prepare such accounts? Are very simple. If at all I take any expense account, okay, expense account, if at all this expense account is starting with liability, for example, outstanding expense I have. Outstanding expenses will have which category, my dear friends? Which category, ma? Outstanding expenses comes under liabilities. Liabilities means opening balance will be on the credit side. So I will say by balance brought down. By balance brought down. What is this, sir? Opening outstanding expense. Opening outstanding expense will be on the debit side. Similarly, outstanding expense liability closing balance will be on the debit side. Debit side, I will say to balance. I will say to balance carried down. To balance carried down. What is this, sir? Closing outstanding expense. Closing outstanding expense will be on the credit side. Similarly, expense may have prepaid expense also. Prepaid expense means what? Asset. Asset means opening balance will be on the debit side. Opening balance will be on the debit side. In that case, what will be happening, friends? To balance brought down. To balance brought down. What is this, ma? Opening prepaid. Opening prepaid account. Similarly, closing balance will be on the credit side, friends. Closing balance will be on the credit side means what? By balance carried down. By balance carried down. What is this, ma? Closing prepaid. Closing prepaid. Got it, friends? So if you observe one thing, you have 2 opening balances. You have 2 opening balances and 2 closing balances. 2 closing balances will be there. Okay, prepaid on the debit side and credit side, outstanding on the credit side and debit side. Both will be there. Now, if at all I balance this particular account, my dear friends, if at all I balance this account, okay, forgotten one more thing. Whatever you have paid during the year, whatever be the expense that you have paid during the year will be expense account debit to cash or bank. Whatever you pay, expense account debit to cash or bank will be the journal entry, namma. So in the expenses to cash or bank. Okay, namma. As per earlier situation, when you pay expense, expense increases. Expense increases. Expense comes under debit category. Debit increases, you have to debit them. See, I have written on the debit side. Now, after you balance all these things, whatever be the balancing figure you get, this is where you have to treat it as you have to transfer to your trading account or to profit and loss account. Okay, this is the item that you have incurred. This is the item that you have actually incurred. Your incurred amount is this much by trading account or whatever the case may be. That is the amount that you have incurred. Understanding, friends? You have taken 2 prepaid expenses, 2 prepaid opening balance, closing balance, outstanding opening balance, outstanding closing balance, and you have taken how much ever you have paid during the year, and the balancing figure will be how much you have incurred during the year will be your balancing figure. That amount has to be transferred to P&L account or trading account or P&L account, whatever be the case. Okay, now friends, that is how in an accrual system, how does that work? Okay, now you'll have both prepaid and outstanding both include in the same account. Okay, now just to avoid complexity, we can actually include in the same way. Similarly, if you take an income account, friends, if you take an income account, what will happen with an income account, ma? Okay, so when it comes to income account, ma, I'll just write. So when it comes to incomes also may have two parts. What are those? You may have outstanding incomes. It means incomes receivable may also be there. Similarly, received in advance may also be there. Incomes received in advance also may be there. In our previous classes, we have discussed in detail, friends. Please have a look at them. Okay, incomes comes under outstanding incomes also, received in advance also. Now, outstanding incomes is a part of what, ma? Liabilities. Outstanding incomes is a part of liabilities. Sorry. Outstanding incomes, receivables, na, ma. Outstanding incomes is a part of assets. Similarly, received in advance is a part of liabilities. Received in advance is a part of what, ma? Liabilities. Incomes comes under asset category. What does it mean? If you have opening balance, that opening balance should be on the debit side. Opening balance should be on the debit side. Opening balance, because asset comes under debit category, na, ma. That's why. And if you have the closing balance of it, closing balance should be on the credit side, opposite side, credit side. Able to follow? Right. Similarly, received in advance comes under credit liabilities, credit category. What does it mean? If they have opening balance will be on the same side, credit side. And if you have the closing balance of it, closing balance will be on the opposite side, debit side. Closing balance will be on the opposite side, debit side. It will have. Here also, if you observe, two opening balances and two closing balances you have. Two opening balance and two closing balances you have. Correct, amma? So both outstanding incomes receivable also may be there, received in advance may also be there. Both the cases we do the same thing. Okay, amma? Chalo, let us include that as a part of our incomes account. Incomes account, what is happening? First of all, outstanding incomes. Outstanding incomes is a part of assets. Assets will have debit balance. Debit balance means opening balance will be on the debit side. You also tell along with me, okay? Again, outstanding incomes. Outstanding incomes means part of assets. Assets means debit balance. Debit balance means opening balance will be on the debit side. Because opening balance will be on the debit side, I will say to balance brought down. To balance brought down. How much is that? What is this, sir? Opening outstanding incomes. Opening outstanding incomes. Similarly, if at all I have closing outstanding incomes, sir, outstanding incomes is a part of assets. Assets means debit balance. Debit balance means opening balance will be on the debit side. Closing balance will be on the credit side, opposite side. So by balance carried down. By balance carried down. What is this, sir? Closing outstanding incomes. Closing outstanding incomes I will have. Closing outstanding incomes I will have. Understand, ma? Similarly, received in advance, if at all I have. Received in advance means it's a liability. Liability will have credit balance. Credit balance means opening balance will be on the credit side. You try to understand the way I'm analyzing actually. Okay, Nama. So your work will become very easy in the future. If at all you understand these rules, the way I am telling you, your work in the future will become very, very, very easy, my dear friends. Okay, Nama. So by balance brought down. Okay, what is this, sir? Well, you are opening received in advance. Opening advance received. Opening advance received. Similarly, closing, if you have it, okay, received in advance is a part of liabilities. Liabilities will come under credit category. Credit category means opening balance will be on the credit side, closing balance will be on the debit side. Correct, amma? Debit side. So to balance carried down. To balance carried down. What is this, sir? Closing advance received. Closing advance received. Closing advance received you have. Okay, Nama. Now what is happening? You observe. Now I have both. I have taken two opening balances and two closing balances in relation to outstanding incomes and received in advance. Both okay. Now I am receiving the income. For example, when I receive the income, incomes comes under credit category. Means what? If they increase, I have to credit them. So if at all I have to credit them by cash or bank. By cash or bank, I'm writing on the credit side. This is what you have received during the year. This is what you have received during the year. And once you, after entering all these items, if you balance this account, my dear friends, this is the amount you'll be getting as a balancing figure. That amount I will transfer it to either to trading account or to profit and loss account as earned during the year. Those are the items which I will transfer to trading account, profit loss account based on how much I have earned during the year. Okay, Amma. So what you need to understand is, as per accrual system, how do I take the opening and closing balances? Those things you have to be very, very careful, both in incomes also, expense also. Okay, are you getting a smooth video, my dear friends, or the video is stucking? Okay, I'm getting very okay, fine, no problem. I hope it is going on well. Okay, it's a live stream, right? So I don't know, internet is fluctuating, that's the reason I'm asking you again and again. Anyways, fine friends, so this is how incomes account is prepared as per this one. Okay, Nama. So now let me show you an example of how do we actually fill these ledgers. Okay, Nama, how do we fill these ledgers? I'll just explain you, but before that, what is direct and what is indirect, that I explain you, then we go. So when it comes to direct means direct incomes and direct expenses are those, let it be relating to direct expenses or let it be relating to direct incomes. Those are incomes and expenses in relation to goods, friends. In relation to goods, you are spending in relation to goods. Those are incomes in relation to goods. In simple terms, if at all you spend it for the sake of goods, means what? It can be either for purchase of goods or it can be towards transportation of goods. For transportation of goods, I want to put a star mark, okay, because there is a small point to discuss. Transportation of goods, or let it be relating to manufacturing of goods. Whatever be the case, we actually in relation to this, if at all the items are relating to the goods, in relation, whether let it be relating to purchases or transportation of goods or manufacturing of the goods, we take it as what, ma? Direct expenses. What is direct income, sir? Sale of goods. We take it as what, my dear friends? Sale of goods or consumption of goods. Anything can be taken. Consumption of goods. Sale of goods or consumption of goods, whatever be the case, we can actually take it as direct incomes, my dear friends. Direct incomes. Okay, Nama. So usually direct incomes or direct expense will be transferred to where, my dear friends? Trading account. In simple terms, trading account. Understand, sir? What? Give us some examples of expenses, sir. No problem. Your purchase expense, your purchase account, purchase expense is a part of is a direct expense, because what are you purchasing? It is goods that you are purchasing, Namma. So obviously the purchase account is a direct expense. Understand? For example, I have paid wages for my labor to pack the goods or to store the goods inside my godown. Okay, Namma. So such kind of wages, I have used a labor and asked them to work on the goods. It is in relation to the goods, Namma. Let it be for transportation or let it be for manufacturing. So I take wages as my this one. Understand, ma? So such kind of examples. And also for transportation, what did I do? I put a star mark. What does it mean? You know, transportation till goods reach last location. Till goods reach last location, only till there is my direct expense. Under transportation, till the goods reach my last location is only my direct expense. Understand? After goods reach last location, sir. After goods reach last location, till, okay, it is my indirect expense. Sir, what is this last location, sir? Wait, I'll give you an example. For example, ma, what I've done, I went to for example, I'm in Bangalore. Okay, what I do, I go to KR market. And from KR market I purchase some I purchase some stock. Okay, I go to KR market and purchase some stock from KR market. Okay, for those who do not know about KR market is a wholesale market in Bangalore. Okay, considered to be one of the Asia's largest markets in Asia. Okay, nama. So KR market I will go and purchase some stock. Okay, after purchasing, what I will do, I have to bring it to my, first I will bring it to my godown. Okay, from godown, what I will do, whenever it is required, I will take it to my shop. Okay, shop is in a different place, godown is in a different place. Okay, nama. First I take the goods from KR market to godown. From godown, I will take it to shop. From shop, from here on I will sell. From here on I'll sell. It means after shop, goods will not be with me, it will go out. Understand ma? It means from the time I purchased till where goods will be with me ma, till shop. I say shop is my last location. Shop is my last location. I will say shop is my last location. Understanding, friends? Because from shop it is given to customers. That's it. Understand? From shop, after shop, it is given to customers. There is no point the goods will be with me after it reaches the shop. Understanding, friends? So it means whatever be the cost I have spent to take the goods from KR market to go down. For example, I have spent 1000 rupees. This 1000 rupees is my direct expense. Okay, and from go down to shop, here I spent 200 rupees. No problem. This is also my direct, because till the goods reach last location is shop. Till there I will spend. Now goods are in shop, correct amma? Goods are in shop now. Now customer came and said, sir, please deliver it to my home. Okay, nama, please deliver it to my home. So from shop, you are delivering it to customer. Okay, out of your own money you are spending. From shop you are delivering it to whom? Customer. What is your last location? Shop. After last location, just now I explained, after goods last location, whatever you spend for transportation becomes our indirect expense. It means, for example, from shop to deliver it to customer, you have spent some 250 rupees ma. For example, you have spent how much ma? 250 rupees. But this 250 is considered to be what? Indirect expense. Why indirect expense, sir? Goods already reached last location, and this transportation expense is after goods reaching the last location. After goods reaching last location. That's why whatever you are spending for delivering the goods from shop to customer, I will treat it as what ma? Indirect expense. I will treat it as what? Indirect expense. Hope you understood. Hope you followed. Okay, nama? Okay, sir. I understood this point also. Okay, in simple terms, direct expense or direct incomes are those in relation to goods, my dear friends. Goods means let it be related to purchases, let it be related to transportation, let it be related to manufacturing of goods. Whatever be the case, I treat it as direct expenses. Understanding? Yeah? All direct expenses are transferred to direct incomes, or direct expenses are transferred to trading account. Or if you remember this, so examples are like purchase, wages, transportation, okay, carriage, inwards and all. Okay, the transportation, what did I say? Till goods reach the last location are my direct expenses. After the goods reaching my last location will become my indirect expenses. Now for that I gave you an example. In what way? I go to KR market and buy. So after purchasing it, I bring it to my godown. To bring it to godown, I paid 1000 rupees, and from godown to my shop to again 200 rupees I have paid. Okay, now for transportation of goods. Got it. And now shop is my last location, because after shop there is nothing that I will keep the goods with me. There is no point that I'll keep the goods with me. Correct? So for that purpose, what I will do, I will say declare shop as my last location. So it means 1000 rupees here, 200 rupees here, both are my direct expense only, because till the goods reach last location, till the shop. Okay, nama? After shop, sir, imagine one customer asked me to deliver the goods to his house. Okay, nama? So from shop you have to take it to customer's place, for which you are spending how much ma? 250 rupees. But it is after the goods reach the last location. Last location is my shop. It is over. That's why I will take 250 rupees as my indirect expense. I will take 250 rupees as my what ma? Indirect expense. Okay, nama? So that is how direct and indirect works. So what are indirect ma? Indirect expense also may be there, indirect incomes also may be there. Okay, both not relating to goods. In simple terms, not relating to goods. Not relating to goods. They are not relating to goods. For example, salaries you take, salaries account. Okay, will I tell my employees, if I have more stock I'll pay you more salary, if at all I have less stock I'll pay you less salary? Will you tell your customers that way? No nama, they'll kill you. So that's why salaries has got no connection with my goods. But here it is not that way. For example, your purchase cost depends on the goods. If more the goods you are purchasing, more purchase cost. More goods you are purchasing, more transportation expense. More goods you are producing, more manufacturing expenses. If you do it less, all these will also be less. It means all these expenses are in proportion to the goods. They are all in proportion to the goods. If goods are more, these expense will be more. If goods are less, these expense will also be less. Understanding, friends? But indirect means what, ma? Indirect are those which have got no relation with my goods. No relationship at all with my goods. No relationship with my goods, my dear friends. Okay, na ma'am? No relationship with my goods. Such kind of items I call them as indirect incomes and direct expenses. For example, indirect expenses, salaries. For example, rent. Rent of your office, for example. Office rent. Okay, it has got nothing to do with your stock. Correct, ma? Whatever be the case, if you have the office, you have to pay rent for using the office, not in relation to the number of goods. Correct, ma? Obviously. So when it comes to incomes, my dear friends, interest income, for example. Interest income depends on how much deposits you have made. Correct, ma? Interest income depends on how much investment you have made. So it is not in relation to goods. Similarly, for example, rent income you take, for example. Rent income is also my indirect income. Why? Because rent income does not depend on my goods. Let be goods there or not also, I will get my rent because I'm giving my asset investment on rent. Understanding, friends? So these are all my indirect incomes. Indirect expense also may be there, indirect incomes also may be there. In simple terms, if at all the item is not a direct expense or direct income, it becomes indirect. All my indirect incomes and indirect expense I will transfer it to where ma profit and loss account. All my indirect incomes and indirect expenses I will transfer to where ma profit and loss account. Correct, amma? So this is what I thought of explaining about the ledgers, friends. So what my request, sincere request is, from beginning you please revise this video once again. Ensure that you are getting 100% grip on how do I treat my ledgers. Okay, friends? And tomorrow's session will be taking ledgers textbook questions, friends, from your ICAI textbook. We will solve questions from your for your ledgers topic. Okay, now friends, meet you tomorrow at 4 o'clock for account session. By the way, morning 11 to 12 we have started with business correspondence and reporting, communication part in your paper 2 along with the law. We started with that particular topic, my dear friends. So I request all of you to please go to that video also. It will be there on my channel, friends. Okay, I will even share that playlist also here. After business correspondence and business correspondence and reporting, I will even start with BCK, business and commercial knowledge also. I will start at the same time, 11 to 12 I will start immediately. Okay, now friends, probably business correspondence and reporting will take for about 10 to 12 classes. Once that is done, we will start with business and commercial knowledge also, BCK also we will start. Okay, that will take again 10 days time. Okay, once these two are done, we will try to start with economics also, same time, 11 o'clock. Okay, now friends, and shortly we are planning to even launch quantitative aptitude also. Once we make a plan for quantitative aptitude, we will start with quantitative aptitude also as well, so that you will get full series of lectures done. Okay, now friends, thank you so much for your participation. It's been almost 50 minutes so that we have taken the class. We'll sign off now, and we'll meet you tomorrow at 11 o'clock for business correspondence and reporting, and 4 o'clock for accounting class. Thank you so much, friends. Have a nice day. Bye.